How's it going, guys? I hope your week has gotten off to a good start. I'm just going to give you a quick market update on the consumer price index that just came out today. This morning when I got to the office, I was watching it live at 7:30 as the numbers came out, and man, it was really shitty numbers. The markets were tanking in real time. And so in today's video, we're going to take a look at the consumer price index, the latest inflation numbers, where inflation is getting better, when inflation is getting worse, what it means for you guys. And I'm also going to show you what I'm buying on these down red days. So with that being said, hit the like and subscribe, and let's jump into today's video. All right, guys, so the latest so the latest consumer price index came out today. I was watching this as it happened and I saw the markets tank instantly when the news came out less than what was expected. Three areas that got hit hard with inflation in the month of August, that is shelter, food, and medical. If we go ahead and look at the individual breakdown of where prices increased in the month of August, we can see that food in general increased by 0.8%, eating out 0.9%, energy and fell. So the only reason that the CPI didn't take as large a hit as it would have is the fact that gas prices were reduced. Now, if you look at other energy expenses in the household, and that is what is increasing substantially. Look at energy costs of electricity and your utility expenses, and you can see that those are increasing 1.5% for electricity and utility gas service in general 3.5%. New vehicles increased by 0.8%. Used vehicles went slightly down. Clothing increase. Medical care commodity increase. Services, shelter substantially 0.7 increase, and medical care services substantially increase. So if you look, for example, at medical care since February, it's been on that steady increase. If you look at shelter since February, again, rents are continuing to go up. And I want to look at food since February, food at home. So 1112 still had an increase of 0.8%, but if we look at prior months for the month, it has decreased a little bit. Overall, it's still increasing. So the markets were spooked by this 0.1% increase in inflation. If we look at the Dow had its worst single day since June 2020. That's over 2 years, its worst single day. So people were spooked, and I can see exactly what is going to be playing out in these next couple months. People are going to start cutting back. It's going into the holiday season now. We've got Halloween, Thanksgiving, and Christmas, which are usually large spending holidays. Retailers rely on these next 3-4 months to get the most of their returns, and when people start cutting back and don't buy as much candy or as much food or as much gifts coming into this year, it's going to lead to these retailers seeing a decrease in spending. They are going to start laying off people. We're already starting to see housing market cracks in the housing market, so that could potentially lead to future decrease in prices in housing, and the recession will come into play into 2023, and then asset prices will continue to fall, eventually stabilize. So what you need to be thinking about, all this noise, all this fear is giving us opportunities to purchase assets at lower prices. And one asset that I'm focused on purchasing, as you guys know, I'm a huge fan of Bitcoin, and I do buy into Riot Blockchain, which is the biggest company mining Bitcoin. And I've been adding to them now for a while, but if we go ahead and look at my history, you can see that on the down red days, I'm slowly adding. And I mean, it's not a lot, right? So today, for example, for the price of a sandwich, if I had gone out and purchased a sandwich, instead I went ahead and purchased this 1.04 shares of Riot Blockchain. It's $7.68 a share, and I see the potential in this company. 1, 2, 3 years from now, this company, once Bitcoin gets back to its all-time highs, this company tracks Bitcoin. So I do my own research. and I find companies that I believe in, and you guys need to do the same. Do your own research, find companies that you believe in. What I'm doing is not financial advice, it's just what I'm doing. So find those companies that you believe in, dollar cost average, put a little bit of money that you can afford to lose into these investments, and 1, 2, 3 years, once these markets get back to normal, once things get back to normal, you will be smiling coming out on the other side. Guys, that has been a quick market update for the CPI index for today. Yes, inflation is bad, but remember, we are gifted these opportunities that come by once every 10, 15, 20 years when the market goes down, and these are healthy. We cannot continue having people spending all this money. We had so much free money come into the system in the last 3 years, and it's finally catching up to us, which is what we need, because greed was taking over, and now we need to be in that mindset of, yes, I may not be in the top 1% in this world, but if I do conserve, save my money and use that extra money to buy into assets that are beaten down, I can have the same percentage return on these assets as the 1% do. So guys, that has been today's video. Thank you for your support. Thank you for following. We finally reached 1,000 subscribers on the channel, so I'm extremely grateful for that. Thank you for your continuing likes on my videos. Please let me know if there's anything else. If you have any questions, hit me up. And remember, I hit a video every Friday. So keep your head in the game, keep investing, look after each other, and I'll catch you guys on the next video. Cheers.